So silver hitting $100 next year, would that surprise you?
No, in fact, I expect it to happen. The inevitable is now approaching the imminent, becoming the imminent. And we're on the edge of a massive depression. The most basic reason for it is the debasement of the dollar, quite frankly. The US government has painted itself into a corner, and the Fed has to basically create a couple $1 trillion of new currency units every year just to finance the U.S. government.
Been a historic week for a lot of assets, including precious metals. Gold now at $4,500, nearing $4,600, and importantly, silver now almost at $80 an ounce, which is a number that I didn't think I would be saying on air for quite some time. But here we are near the end of 2025. Doug Casey is here to give us his take for what's going to happen in 2026 to not just the precious metals complex, but also the entire economy, what he thinks is most important, and why the state of education is about to change forever. Doug Casey is the author of several best-selling books, including Crisis Investing and then Crisis Investing in the 90s, and now The Preparation, which we'll be talking about. And he's also the author of several online forums, including The International Man. Welcome back to the show. It's good to see you, Doug.
It's a pleasure, David, although you're looking at me out on my farm in Uruguay at the moment. Wonderful place to spend the Christmas tide. But as per what you just said, silver, I guess, is the financial market that is getting the most attention at the moment. And I always tend to look at these things from a historical point of view. And if you look at the history of silver as a commodity, particularly a monetary commodity, in the modern era, it started with Spain's conquest of Mexico, which liberated many, many, many millions of ounces of silver, changed the whole world's financial system, actually. And since then, silver has been a monetary and political football in the U.S. Some of you in Canada would probably remember the name William Jennings Bryan, who was a presidential candidate at the turn of the last century, who gave a famous Cross of Gold speech. He wanted to monetize silver, throw gold out entirely, and use silver, because at that time, relative to gold, silver was an inflationary device. He was a Democrat, and that party's always wanted to inflate the currency, thinking that it's a good thing. But it's actually a very bad thing to do that. Anyway, look, silver, bringing ourselves up to present time, and should it be trading at $80 an ounce right now? Another thing that people have forgotten is the fact that at one point in the early 60s, the U.S. government had 2 billion ounces of silver in its vaults. And it liquidated the entire amount. And in 1965, Johnson took silver out of U.S. coins in addition. So silver's gone from boom to bust and glut and so forth for many years. Now, for the last several years, silver's been running a deficit. And last year, it had a 300 million ounce deficit. About 865 million ounces of silver were mined in new production, but there was a 300 million ounce deficit. So I guess to answer the question, if we look at it from a fundamental point of view, yeah, there's good reason for silver to be at $80 an ounce, considering the amount of use deficit versus the amount that's being mined today.
There's some stuff I'm seeing on Twitter and I want to ask you to see if it's accurate or if you have any thoughts on this. According to this source on Twitter called Bull Theory, the physical market can no longer meet soaring demand. Here's what's actually going on. China is changing the rules starting January 1st, 2026. China will restrict silver exports. To export silver, companies will now need government licenses. Only large state-approved firms qualify. At least 80 tons, around $30 million in credit lines. Number two, the silver market was already short supply. That you talked about this. Physical silver inventories are collapsing. Number three, this is where it gets serious. COMEX inventories are down 70% since 2020. London vaults are now down 40%. Shanghai inventories or 10-year lows. I think the general theme here is that there's a supply shock going on several fronts, which explains why silver's been outperforming gold. What do you think? Is this accurate? Is this true?
Yeah, it makes sense to me because, look, getting back to the basics again, silver is one of the 92 naturally occurring elements. And of those elements, silver is the most reflective of light and the most conductive of both heat and electricity. So it's a genuine high-tech metal. And it's said, I don't know the exact amount of truth to this, but the next generation of batteries currently under development is going to use silver to a great extent, not lithium. Perhaps that's part of the picture too. So add to that the fact that twice in the recent past, fairly recent past, in 1980, silver hit $50 an ounce, and in 2011, it hit $50 an ounce. But the dollar has lost a huge amount of value since 1980. If it was to go to, in real terms, the high that it hit in 1980, it would have to go to 200. So I guess bottom line, boiling this all down, yeah, I think silver has reached a new plateau and it could very well go higher because how much of the paper silver that's traded on the exchanges really has physical silver that's good for delivery? It's a good question. So, but look, the main way I play silver, for many years, I bought silver and just put it away in a vault. And so I have a bunch of physical silver, but silver stocks is where the real volatility is at. Uh, Most people won't even remember this, but this is ancient history, in 1970, a guy named Norman Lamb wrote a book called Small Fortunes in Penny Gold Stocks. It's still available on Amazon in the used book department. And Lamb pointed out that silver stocks on the Spokane Stock Exchange, which used to exist, I actually visited it, went on average about 100 to 1 during a silver boom during the 60s. So it's very, very volatile. It's a tiny market, much smaller than that of gold. There are no big inventories of silver. Yeah, it could happen. It could go to $200. That's not a prediction. I'm just saying that I'm happy to own a lot of physical silver and own silver stock.
You already know why people hold gold. It's because it's real money. But what if your gold could do more than just sit in a vault? Well, that's where our sponsor today, Monetary Metals, comes in. They offer a way for you to earn a yield on your gold paid in physical gold. Through their leasing marketplace, you can earn up to 4% yield per year in gold. Instead of paying storage fees, your gold actually works for you. And because that yield is paid in gold, not cash, your stack grows no matter what the dollar is doing. Thousands of clients already earn monthly interest in gold and silver through Monetary Metals, and the numbers just keep climbing. So don't just hold gold, start earning real gold on your gold today. Go to monetary-metals.com/Lin, link down below, or scan the QR code here. Put your gold to work soon. Look at this chart. Look at this long-term chart. That's a parabolic move. It's a straight line. It's not even like sloped. So you see something like that. Is your instinct to sell some of your silver holdings?
Yeah, that's absolutely my first instinct, especially with commodities. Because once again, to bring up some historical context, the longest bear market in all of human history is commodities. Things like copper. If you had a piece of copper when you were a caveman 10,000 years ago, you were a caveman billionaire because there wasn't any around, and it was very useful even then. So the price of everything, food, metals, you name it, has been in a long bear market for 10,000 years. And that's going to continue with the development of nanotechnology and things of that nature. But that's the long term. For the short term, yeah, that chart scares me a lot. But as volatile as the world's monetary situation is today, I'm very happy continuing to own my physical silver, and the public is not at all interested yet in silver stocks or gold stocks, really. So I'm very happy continuing to own both of those things. And if it drops back to $50 or $30 or $40 an ounce, I don't care because it's just an asset that I want to continue accumulating for the long term, as I've done for most of my life, quite frankly, which is how I wound up with all this silver.
In 1980, some people attributed the parabolic rise to the Hunt brothers squeeze. In 2011, gold soared due to the debt crisis in Europe and other issues as well, and silver rose with it. If you had to attribute one narrative to this parabolic move, and we'll close it off here on silver, what would it be?
The most basic reason for it is the debasement of the dollar, quite frankly. The US government has painted itself into a corner, and the Fed has to basically create a couple $1 trillion of new currency units every year just to finance the US government. So that the fate of the dollar at this point is sealed. And that's what's driving both gold and silver. So I guess on the most basic level, that's my answer.
I want to talk about the economy now. We'll come back to your predictions for 2026. So stay tuned for Doug Casey's outlook for the assets that we're discussing today. And comment below what you think is going to happen to silver and gold in the new year. Now let's move on to this clip of the Secretary of Commerce, Howard Lutnick, on air right after the GDP report came out last week. Take a listen. 4.3% GDP, huge number. The Trump administration is celebrating this, of course. This is what he had to say.
4.3 GDP growth, beating it by a full point of 3.3. How does that affect our bottom line, our pocketbook issues?
So just think, the whole world out there in the third quarter, the United Kingdom grew 0.1, the European Union grew 0.4, and Japan fell 0.6%, fell 0.6%. Donald Trump's economy grew, the United States of America, the biggest economy in the world, 4.3%. What that means is that Americans overall, all of us, are going to earn 4.3% more money. We're making a raise. It's a simple way to do it. We've got more jobs, lower energy costs, and lower interest rates coming. This is the golden age coming. 4.3% this quarter means Americans on average are making more money in their pocketbooks. That makes for a great Christmas.
Can you evaluate what he just said here? A lot of things. We're all going to be 4.3% richer on average. More jobs coming, lower interest rates coming. Well, we know lower interest rates are coming. Was this a great Christmas economically?
Look, Mr. Lutnick is a great salesman. He's a hustler. He's a carny barker, much like Donald Trump himself is. And some of his figures impress me as being correct. What he said about England and Europe, quite correct. They're sinking ships. And the question is, for people that have capital, where are you going to put the capital? I mean, physically, what country, what political jurisdiction are you going to put it in? So yeah, I'd get my money the hell out of England and Europe, sinking ships, and the U.S. is a logical place to put it. So that accounts for the fact that part of the reason that the U.S. is doing better than other countries in the West. No question about that. Also, the fact is, as bad as things are on the tax and regulation front in the U.S., it's better than Western Europe. So the horse may be going to the slaughterhouse, but it's the best looking horse on the way to the slaughterhouse. So some of the things that he said are correct. Others are not correct. But on top of that, though, I don't trust any of the numbers that come out of government agencies, including the U.S. government. I don't trust it much more than I trust those coming out of the Argentine government, frankly. So one thing that I do trust, however, there's a meme that started circulating. A guy named Mike Green did some thinking, and he took the poverty figures for the U.S., and it said that in the U.S., if you earn less than $30,000 a year, if you're a man, a woman, and two kids, less than $30,000 puts you in the poverty level officially. But Green crunched the numbers in a realistic way And the fact is that if you earn less than, and hold on to your hat for this, $140,000 per year, you're approaching poverty. And he spelled it out. I don't have all of his numbers here in front of me, but you can research it on the internet. $140,000 poverty level green. That'll probably get you there. And see his reasoning. And he's actually quite correct, because an American that's earning $100,000 a year today is just getting by. So that kind of puts paid to the promotion that, look, we're on the edge of a financial precipice. The US government has been spending vastly more money than it's taken in for many years, in spite of the fact that taxes have gone up, money printing has gone up, inflation has gone up as a result, borrowing has gone up. So, David, I will go back to what I was saying before and have been saying for many years. The inevitable is now approaching the imminent, becoming the imminent. And we're on the edge of a massive depression, a time when most people's standard of living drops significantly and noticeably. It's not going to be covered up any longer with credit card debt and automobile debt and mortgage debt and second mortgages on your house and so forth. So
how did this happen? How did this happen, Doug? Just give us a history lesson. We came out of the Great Depression. There was the Second World War that arguably boiled the economy. There was a baby boom right afterward. The 50s was a golden age of growth. There were periods of recessions all throughout the last 70 years. Of course, financial crisis in 2008, but then we had the longest bull rally in American stock market history from 2009 to basically now. And now you're saying we're at the precipice. This is all going to end, and our living standards are going to decrease. How do we get here?
Well, basically, the country as a whole, not to mention the government, which consumes about 40% of the economy, directly and indirectly. The way you become prosperous is by producing more than you consume and saving the difference. And Americans in particular, but the West in general, has been consuming more than it's produced for decades now. That's not how you become wealthy. This has been financed by debt. Where's the debt come from? It's borrowing against assets that have been created and produced over many, many generations, hundreds of years, and by mortgaging your future. So this is disguised the essential problems that we're facing. One of the big problems is the fact that we have a fiat currency. It has no intrinsic value other than what the government assigns to it. And as they create trillions and trillions more dollars to prop up things, the dollar is not only going to lose value, but a lot of shaky financial institutions are going to fail. Half of the companies in the Russell 2000 are running at a loss today. The stock market is basically the Magnificent Seven, the artificial intelligence companies that have gone to ridiculous levels. And in my opinion, you're allocating huge amounts of money towards a technology which will work, but it may be premature, just as they did much the same thing with the internet. Great thing. But it was a bubble that destroyed a lot of people along the way with overpriced stocks. So basically, I'm rigged for heavy weather. And having been long gold and silver and certain other commodities for years, it's treated me very well. And I think it will continue to for the time being.
Are there any other hedges against fiat debasement besides precious metals?
Look, real estate, you say, well, they're not making any more of it. Yes, I understand the argument for real estate, and I own a lot of real estate. The problem with real estate, however, is that all over the West, especially in the US and Canada, though, real estate floats on a sea of borrowed money. If you can't borrow money, you can't buy real estate today, and you really can't sell it. So it's all about the price of real estate is about the price of interest rates, or the level of interest rates, I should say. And the way I see it, no matter what the Fed does in the short run, long term, interest rates are headed up back to the levels that they were in the early 1980s, which most people have forgotten. Even the US government was paying 15, 16, 17% to sell T-bills back in the early 1980s. We're headed back there just because of the debasement of the currency. Nobody's going to lend money for 4% when inflation's running 5 or 6%. And I think in the next 3 or 4 years, it's reasonable that we're going to see even official numbers show inflation's running at 7, 8, 10%, maybe more. Who knows?
7, 8,
So
10%.
real estate doesn't look very good from that point of view because of the foundation of borrowed money that lays under it. So where do you hide at this point? What's cheap? The stock market's not cheap. The bond market's not cheap. If interest rates go up, the bond market's going to go down proportionately. So where else can you go? This is a problem that we're facing as a civilization, not just that I'm facing and you're facing as an investor. Where do you put your money that's safe and secure and cheap and realistically high yielding? There's almost no place to run and hide now.
What happens when we get this Great Depression? What happens to not just markets, but also society at large? Whenever we've had crises in the past, people have historically traded freedom for security. What about this time?
Yeah, well, in the past, when they have done that, the government has been more stable than it was today. And people trusted the government more than they do today. But with very good reason, people don't trust the government today. I'm talking particularly about the US government, but this is equally true of the governments in Canada and Western Europe. Government has turned into not that it was always, this has always been the case, but it's turned into a gigantic parasite, a gigantic albatross around the necks of citizens, where government has become a vehicle for grift, where half of the population is attempting to live at the expense of the other half of the population. And it's become unsustainable, as reflected with the level of taxes. Taxes at all levels, real estate taxes, income taxes, VATs, sales taxes. I think anybody listening to this might recall all of these things have gone up lots and lots in the past. And still, the governments are running at huge deficits and are bankrupt. So it's funny. People are looking for the government to kiss everything and make it better. But not only is the government the cause of most of these problems, but it's no longer in a position to disguise the problems anymore. So how's this all going to end up? Well, in the past, it's ended up with the natives going into the streets with torches and pitchforks and attacking the people in the castle. I'm not sure how that's going to wind up these days with so many citizens of the West basically living off the government, either being employed by the government or getting benefits from the government. It's unsustainable when you're talking about bankrupt governments across the board. So, how are they going to solve the problem in Europe? I think that somehow, idiotically, they think that fomenting a war against Russia will somehow solve the problem. It'll certainly distract the population. They'll have something serious to worry about, not just heating their houses, but...
Well, you mentioned something to me offline. You said that there's a possibility of the European Union breaking up. Why is that?
Look, when the European Union was put together in the 50s, it started to be put together in the 50s. It was called the European Iron and Coal Union, where they were reducing tariffs and allowing trade between the countries to facilitate. You know, France produces this, Germany produces coal. They can trade and they're more competitive. But the thing grew and grew and grew. And now the European Union, as an institution, the European Union itself, the entity, the European Union, the government body, employs 80,000 people, most of them in and around Brussels. And do they produce anything? No, they don't. All they do is pass laws and create distortions in the market. I mean, it's crazy. They're trying to regulate the 200 varieties. The next thing that they want to do, and they're trying to do this, is have a Europe-wide income tax and a European army in addition. So it's gotten out of control. It's going to fall apart.
So you think it's just
sustainable because all these governments in Europe, like they're all bankrupt anyway. So this is a shell game. So
okay. In going back to what's going to happen after the Great Depression, this coming depression, financial reset, you've talked about industries that you do see will be the future. You said robotics, for example, will be the $1 trillion industry. Perhaps that's going to lift us out of this depression if it were to come. What do you think?
Listen, technology itself is what's lifted mankind out of grubbing roots and berries in the mud. The most important thing to happen in history was the Industrial Revolution 200 years ago. And it's still with us and it's accelerating. And things we're seeing like AI, which is overblown at the moment, but is a wonderful thing. Computers, robotics. There are, I've been told, 150 different robotics companies. And by robotics, I mean working on bipedal robots that will work like little Terminators, if you would. In China alone, I don't know how many of those are going to survive, but robotics is huge and going to get bigger. And there's even better things that are happening. I mean, we're finally at the threshold of nanotechnology becoming realistic. Nanotechnology is basically the melding of submicroscopic computers with submicroscopic assemblers and creating pixie dust. Well, that's still out there 10 or 20 years. But things like the space industry, not just robotics. The fact that Musk has developed rockets that reduce the cost of putting things in orbit, not just by a factor of 10, but by a factor of 100. And now Bezos's company, Blue Origin, is replicating it and doing the same thing. And the Chinese are behind, but they're also doing the same thing with reusable rockets. Now, there's some fantastic things that are going on in technology. And in the long run, that's the important thing. It's not politics or basically politics or even economic stresses and strains. It's technology, which will continue to elevate the human condition. So, look, I'm a long-term optimist. I just think that we're in for some really tough years throughout the rest of this decade at a minimum.
If you think that technology is the future of mankind, but at the same time tech is expensive as an asset class, then what do we do as investors?
Well, yeah, I ask myself that all the time. Now, for me, it's been an easy question to answer because I've always specialized in resource stocks, mining and oil and energy. And those have been generally good places to be, especially financing the companies, which is what I've always done. The question I'm asking myself is, okay, how long do I want to stay in that area, which has been good? I think that, look, the cheapest area of the market right now is energy, oil stocks, gas stocks, uranium stocks, coal stocks, across the board. This isn't a high dividend era, but they all yield pretty high dividends right now, which is an indication that they're cheap. So I'm When I have fresh money to invest, I'm generally going into oil and gas and uranium and coal. I think they're all going higher. They're all really cheap right now, incidentally. They're really cheap. Oil and gas are selling for typically at or below the cost of production everywhere. And the safest, cheapest, and cleanest form of mass power generation, is unquestionably nuclear. And uranium, I think, is going higher as well. And coal is something that everybody hates. And generally, I like almost any commodity that everybody hates that has use value. So that's where I am generally. The other place where I am, it's not for most people, but is in mining stocks. And I generally look at the small mining stocks. The epicenter is in Vancouver, where you are now. The public is still uninterested in them. They've been taught to hate mining stocks. And of course, the average person doesn't realize that he wouldn't have a car to drive or silverware to eat from if it wasn't for miners. The mining stocks are still very, very cheap. And they're very, very volatile. So I'm still heavily involved in them. Where else to be? It's a problem. That's where I am.
What about investing in yourself? So let's talk about education and the future of education. If the next decade is going to be unstable, Doug, what do we do to prepare for that? Which skills will matter more than just credentials?
Well, earlier I mentioned the problem with debt. And the official number is that in the United States alone, I don't know what the numbers are for Canada, but they're probably proportionally about the same. $1.7 trillion is owed by graduates of universities to people that finance their education. It's absolutely absurd because most kids today take liberal arts, they take sociology or political science or economics or gender studies or God knows what, or English for that matter, which is wonderful to know, but it's something you should learn as a hobby. Anyway, for decades, kids have been told that the way to get ahead in the world is to get a college education, and you'll coast into a middle class lifestyle from there. But it's not true. Everybody has a college degree today. The colleges have been captured by leftists and Marxists and the colleges. Look, I've been saying for years, I said this when I was on the Phil Donahue show, actually, by myself, just before the election in 1980. I said, listen, you shouldn't go to college. I went to college. I considered a misallocation of 4 years of my time and a bunch of my parents' money. Not as much, nearly as much as it would have cost today. So what I've done with my friend Matt Smith and his son Maxim is write this book called The Preparation. It explains why you should not misallocate that 4 years, that extraordinarily valuable 4 years of time and a whole bunch of money to go and sit in a classroom and listen to leftists lecture you for 4 years about how bad Western civilization is. Now, if you're taking STEM, science, technology, engineering, math, okay, that's a different story. But in North American colleges, most of the students taking STEM courses are foreigners. They're from the Orient, quite frankly. So what we've done in this book is not just tell people what they shouldn't do. Don't go to college in order to be corrupted, but what they should do. We've divided the 4 years of college into 16 quarters. And in each of these quarters, in addition to doing learning the things that you would learn in college, literature and science courses and all this type of thing, we've laid out exactly what you should do and where you should go to become a Renaissance man. In other words, somebody who, even if they were dropped into the jungle in the Congo, would be able to survive and make it and emerge successful and even wealthy. For instance, one quarter, we suggest you learn to be a welder, a very valuable skill, good everywhere in the world. Another quarter, we show you where you go to learn how to build a house, from the foundation through the plumbing, through the electrics and everything. Another quarter, you go off and learn to sail. One of our co-authors, who's 20 years old now, spent 3 weeks sailing from the Falkland Islands around Cape Horn to Chile and learning to be a competent sailor. Now he's going to Thailand, where he'll spend 3 months learning Muay Thai, because any successful, competent person should know how to defend themselves. So we go on, and by the time you finish the program we lay out here, you'll have achieved the basics of an MBA, the basics of a law degree, and lots of hard skills that I've just enumerated, a few of them. And it won't have bankrupted you in the process. So that's what this book is about. It's available on Amazon. Everybody should read it. And if you have a son or a grandson that is on the point of going to college and wondering what to do, this book gives them a plan, because you don't want to just sit in your mom's basement and play video games trying to figure out who's going to give you a job, which incidentally is a foolish concept. Part of this is about learning to be an entrepreneur as well. Sorry to have gone on like this, David, but I'm enthusiastic about the concept of a properly educated man, and a properly educated man is a Renaissance man, in effect, not just somebody that has a goofy diploma to hang on the wall for having sat in a class and listened to lectures for.
Well, I think what you're talking about is lifelong education. I mean, yes, you should aspire to acquire all these different skills, even after, if you do choose to go to college, learn self-defense, for example, something I've endeavored to do myself. But this is an article that highlights what you should be doing in your formative years right after high school. So this is from a gentleman by the name of Stephen Tave, CEO and president of the American Higher Education Development Corporation. I've owned and operated trade schools for 40 years, and Gen Z is onto something. They recognize the value of vocation education. I won't read the entire article for you. I'll summarize a few stats discussed here. Enrollment in vocational-focused community colleges jumped 16% last year to its highest level in 2018. Construction trades enrollment up 23%. HVAC and vehicle maintenance up 7%. Gen Z increasingly views skilled trades as AI-proof. Unemployment rate for vocational school graduates in their 20s is 2.1% versus 15.3% for four-year college alumni. Only 16% of Gen Z parents believe a college degree guarantees long-term security for jobs. And they're doing this because of the fear that AI is going to take white-collar jobs. Let's talk about this trend. What do you think?
He's absolutely correct. It's important that you actually know things that are usable in the real world, so that you can provide goods and services for other people. This is one of the ways, incidentally, that college is being degraded. It's that if somebody is assigned a paper, I'm almost certain that 90% of the students to deliver the paper go to AI, ChatGPT and a dozen others, and have that write the paper for them. But wait a minute, that's not helping you get an education. That's helping you pass the test, which is another reason why the value of diplomas is being degraded. No, you have to learn how to not just know things, not just fun things to know, academic subjects, so that you can go to cocktail parties and talk about literature or talk about history. Both are very important. But those are things where you should educate yourself. I think he's quite correct. You have to learn real skills that will allow you not just to talk about airy-fairy things, which are nice and even important, but provide goods and services for other people. Fix the pipe when the water is leaking, that type of thing.
Absolutely. So everyone should check out The Preparation. The book is out now. So finally, I promised the audience to get your outlook for some of the assets that we discussed, especially the ones that you do like. Let's start with precious metals, because we started with the started the conversation with silver and gold. So silver hitting $100 next year, would that surprise you?
No, in fact, I expect it to happen, and maybe it'll go a lot higher. Although, look, I certainly hope nobody goes out and bets the farm on that right now. Even at these prices, you should, take some extra money if you have it and start buying a little bit of gold and buying a little bit of silver and do that consistently. You want to build an asset base. Better late than never. As far as the price level of gold, I've said for several years now that gold was reasonably priced relative to everything else, food, clothes, houses. Well, now it's actually a little bit overpriced relative to other things. That doesn't mean it's not going higher, though, because the problem that we have is the world monetary system, where central banks are buying gold because most of the assets that they have are U.S. treasuries, and they don't want to own U.S. treasuries. They realize that they're the unsecured liabilities of a bankrupt government. So they're dumping their U.S. treasuries, and where can they put it? If you're a central bank, can't buy real estate, you can't really buy stocks. They're buying gold, and maybe they'll even start buying silver, which has always been a secondary money. So answer to the question, gradually accumulate, even at these prices. Gold and silver as a speculative thing. And as inflation gets out of control, people are going to be forced to speculate. Well, my specialty has always been small resource stocks, as I said before, the metals and the energy materials. So, and the stocks in those areas are still relatively cheap. So that's something to look at, those two things. But I don't know. Did I answer the question or not, David?
Yes.
I'm not sure.
Yeah, for sure. And which of the commodities that you talked about, copper, oil, other base metals, things that are needed for the transformation of the economy and tech, which do you think will be the best performer in the next five years? I'm going to extend this to 5 years, not just next year.
Okay, silver is definitely a high-tech metal that's being recognized as such somewhat belatedly. Gold is money itself. Therefore, it's going to go higher as fiat currencies go down. One metal that people don't talk about, but is perking up, is platinum. Platinum is really the smallest of the metals market. Well, palladium's smaller, of course. But let's talk about palladium, because 70% of platinum is mined in South Africa. There are not big inventories of platinum. And as one of the 92 naturally occurring elements, there are certain things from an atomic and chemical point of view that if you need platinum, there really is no substitute. Or there are substitutes, but they're not as good. So platinum, which is $2,000 an ounce now, and in the past has traded for considerably more than gold from time to time. I think because of the geopolitics of being mined in South Africa, because South Africa's going to have big problems, and those mines are in big trouble in South Africa. And the rest of the platinum in the world comes from Russia, which is another kettle of fish. So I think it's also a good speculation to buy some platinum, which you can do. But I think all of the commodities, copper is about $5.50 right now. And since it takes decades to build and get permitted and then finance a copper mine, and copper, as the world is electrified more in the future, which it will be with AI and all the rest of this type of thing, copper is also a good bet. And so good copper stocks are a good place to be. Same goes for nickel at this point. So, I'm back to the story of it's a good time to get involved in mining stocks because almost nobody owns them and everybody hates the mining business for the reasons I mentioned earlier.
I was just going to show you a chart of the mining stock. Let's finish off on the mining stocks. It's already, the GDXJ index is already up 170% over the last 12 months, Doug. And so I understand that you think the commodities are cheap, relatively speaking, but are their stocks still cheap?
Not as cheap as they used to be, but you have to recall that in the past, the S&P 500 at times in the past, 20% of its value was in mining and oil. Okay. Today, mining and oil together are about 4 or 5%. So relative to the rest of the market, it's still cheap. Point number one. Point number two, these are teeny weeny and very volatile parts of the market. It's not like consumer durables, which don't move a lot. Everybody needs them. It's consistent. These things are very, very volatile. And take gold. Since it was liberated in 1971, previous to that, it was controlled at $35 an ounce by the US government. Since then, we've had 5 big bull markets in gold stocks. But each of those bull markets, the average gold stock went about 10 to 1. And with the smaller stocks, many went 100 to 1. And I personally owned a couple of them that went 1,000 to 1. And I'm not talking over the course of a lifetime. I'm talking over the course of a cycle of 5 or 6 years. So to answer the question, the fact that a gold index is up 150%, that tells me that the market's waking up from very depressed metal levels, and it could easily double and double and double again, as small and as volatile as it is. And with the fundamentals, which I'm not sure I've done as well as I'd like in laying them out, but yeah, this is a good time to be in it. Not the absolute bottom, but listen, you don't want to try to pick the absolute bottom. It's better to get in on a trend and ride the trend.
Well, we appreciate your insights, Doug, and I thank you once again for your contributions in 2025. We look forward to more of you in 2026. Where can we find you for now? Where can we follow you and follow your work?
Well, internationalman.com is a website that we have, which has great articles every day by me and other people, like, well, for instance, David Stockman, an old friend of mine who used to be Reagan's management and budget guy. Lots of other guys. So go to internationalman.com, and on YouTube, I do a podcast called Doug Casey's Take, and we have a newsletter called Crisis Investing as well, where we pick individual mining and energy stocks, as well as talk about the economy. So I guess those 3 things, David.
Okay. Well, we'll put the links in the description down below, so please make sure to follow Doug Casey there. Thanks a lot, Doug. Once again, have a wonderful, happy new year. All the best in 2026, and we'll see you again soon.
Same to you, David.
Thank you for watching. Don't forget to like and subscribe.